What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video. In this video, I'm going to cover a little bit of what we went over last week. I'm also going to talk about a divergence that is worth monitoring. I'm going to go over an update on the stocks that I said that I started to accumulate last week. And then I'm also going to cover some key areas to look at with the busy week ahead of us. With that said, we'll hop right into it. So last week, I went over a few different pieces of context, including the S&P RSI divergence. I went over a macro support on the VIX. I went over positioning. I went over the fear and greed index, and I also covered market breadth. And I said my general lean is that I do not recommend that people chase the recent highs and instead wait for a pullback where the risk reward is more appealing. And I still stand by that because on one aspect, the majority of the context that I went over last week are still valid. The only thing that has changed is the market breadth. Okay, so last week I talked about how tech was leading, right? Tech stocks were basically, doing a lot of the work in terms of moving the overall market to new highs, okay? However, we have seen the opposite occur where now the NASDAQ is the weaker index and the S&P and the Dow Jones are sustaining value much better, okay? So to look at that, on the weekly chart, right, this is the NASDAQ futures, which is mainly made up of tech, right? By looking at the back adjusted futures contract, right, keyword back adjusted, right, we can see that the previous all-time highs was 17,700, okay? We have seen this week so far is red, okay? So far over the last week, the NASDAQ has been down 0.61%, okay? Not only is it down this week, it also failed to break above last week's high, okay? On the flip side, you could see that S&P, not only is it up 0.64%, but it also managed to break above last week's high, okay? Then you look at the Dow Jones and it's up way more at 1.36% over the last week, and it's managing to break above to all new all-time highs. So look at the difference in these weekly candles, right? This is the Dow Jones, which has been the strongest index of the week so far, whereas the NASDAQ is weak and leading pressure to the downside. Okay, so the market breadth that I talked about last week has totally changed, okay? So now you're seeing a much broader rally across the market as opposed to just basically one sector doing the majority of the work, okay? We could also see this in the heat map on FinViz. So this is just one-day performance today. You could clearly see tech, right? Technology, communication services, consumer cyclical. You could see a lot of red, okay? On the flip side, you see other sectors such as financial, right? Financial stocks were very strong today. Energy, healthcare, consumer defensive, right? You see a much broader strength, okay? And what that's doing is it's allowing the overall market to sustain value much better without having to rely on just tech names, okay? So definitely keep an eye on that going forward, okay? Now, to the other context that I went over, right, we're still seeing a divergence in the RSI, right? That was one thing, right? We see how the SPX, the S&P 500, made higher highs despite the RSI making lower highs, right? So that's one thing, right? That kind of shows that there's some weakness involved on this push higher, or potentially that this push higher will not be able to sustain. Now, does that always work? Absolutely not. However, when using different pieces of context, all I'm doing is, trying my best to put pieces of the puzzle together to come up with an overall idea. Okay, so the RSI divergence is still valid, right? We also have the VIX, right? That VIX macro support area that I went over, right? We also have the VIX bouncing from that. So the VIX over the last week since I did the last video is actually up 0.9%, okay? Despite the S&P also, being up 0.6%. So that's still valid. We still have some support from that macro support level on the VIX. We also have positioning that is very, very, very lopsided still, right? Positioning is near all-time highs, or at least highs of the last couple years. And then we also have the fear and greed index, moving very close to that extreme greed. So right now the reading is 74. Extreme greed is technically quantified as 75 or more. I saw this number as high as 78 last week, but it's right where we talked about it last week. So that still remains, very, very greedy, meaning that the majority of market participants think that higher prices are imminent. Okay, and what that does is it sets up for potential aggressive moves to the downside if you do see a flip of sentiment, right? Any bearish or hawkish news that flips the market to the downside can be exaggerated because of that lopsided positioning and that lopsided greed, okay? So, in plain English, I still do believe that the market is going to come off for a better risk reward from the long perspective. Now, do I think there's going to be a crazy crash? No. Could it happen? Of course. But I am just looking at, a general market pullback where the risk reward is better, so that you're not necessarily chasing all-time highs on the S&P cash index, right? So I still stand by that. So one more development that I wanted to add to these pieces of context is this divergence that I'm going to go over right now. Okay, so what we're going to do is we're going to look at the NASDAQ, okay, and we're also, so I'm going to make this a line graph because it's easier to see the divergence. We're going to compare this with TLT, okay? So usually what should happen is TLT, which represents the iShares 20-plus year Treasury bond fund, usually these two instruments will correlate, right? The NASDAQ, QQQ, and TLT. Usually these two instruments correlate, okay? As you could see, let me overlap them, right? You could see both decline, right? Then they made bottoms in late October, and then they started to uptrend together, okay? However, since the new year began, right, in January, we have been seeing a divergence where NASDAQ has been continuing higher, whereas the bonds have been moving lower, right? This is a clear divergence here. Now, what does this mean? Okay, so this divergence was actually written by, what's the guy's name? I forget the guy's name. I'll put his name in the description of this YouTube video. But he was the one that kind of brought this divergence to my attention. So he wrote, when bonds top out and stocks keep rallying, the inflationary picture may not be as rosy as stock investors think it is. Okay? With stocks rallying to new highs, as in QQQ, and TLT not confirming that rally given its lower highs, the upside in stocks could be limited as bonds show that a top is likely in place. Okay, now, is this 100% going to, forecast a drop? No, but when we look at this divergence along with the SPX RSI, the VIX macro support, the positioning, the fear and the greed, and all those other things, now we're starting to see pieces of context kind of come together, and it kind of just makes you cautious to, as to whether or not you should chase new highs. Okay, all I'm doing is giving you this information. It's up to you to decide what you would like to do with it. Also, Thomas Lee, who is the head of research at Fundstrat Global Advisors, said the recent rises in bond yields and the strength of the dollar over the past month suggests that the stock market might be approaching its peak for the first half of 2024, right? Is Thomas Lee going to be correct? Who knows, but it does follow what I'm showing you on this divergence right here. To look at it a little bit better, I'm just going to show you it on a normal candlestick, right? So let's go back here, candles. Okay, so now we're looking at the QQQ, right? Notice how this bottomed in October, right? Late October, right? It bottomed and has since been on a nice uptrend, right? TLT, same deal. Bottomed late October. Not only did it bottom late October, but it also led. This TLT bottomed first. Okay, it bottomed on October 23rd, whereas QQQ didn't bottom until October 26th. Okay, so TLT led. Now, I don't know about you, but basically what I'm trying to, kind of say is, what's to say that TLT will not lead the downside? Now, could I be completely wrong and this be completely useless? Yes. However, if this divergence continues, it is worth noting. Okay, so definitely keep an eye on that. Okay, so like I said, SPX RSI, VIX macro, support, positioning, fear and greed, and now we have this QQQ versus TLT divergence. Those are all pointing at the fact that there might be a decline in the market, and and with that said, it will. I personally would say to wait and not to chase recent highs on the buy side. Wait for a better risk reward lower. Okay, so now Dylan. Okay, if we get this drop that looks to be occurring, where do we want to buy? Okay, obviously that's the tough thing, but I'm going to go over some key areas for you guys. Also, I wanted to note that the Fed decision is tomorrow at 2 p.m. Eastern time, right? If we look at the economic calendar, you can see FOMC announcement at 2 p.m. Eastern time. And then Thursday, you have jobless claims as well as a bunch of different earnings, right? Thursday, you have Apple, Amazon, and Meta earnings. So definitely keep an eye on that. And then Friday, you have the jobs report, which is also very, very important. So this week is very busy. So essentially what I'm saying is make sure you have a clear roadmap of key areas to look at on the chart or on the tape or, however you trade, just so that you're one step ahead, right? Just so that when the move does occur, you're not, all overwhelmed and figuring out what to do, right? So definitely having a clear roadmap and being prepared is very, very important. So near term, okay, NASDAQ, I wanted to highlight this anchored VWAP using the previous low, right, the previous swing low, okay? So this anchored VWAP is exactly where we bounced on the reopen tonight. Okay, you can see there's no coincidence there. Okay, also that anchored VWAP lines up with this previous swing low from the last week. Okay, so over the last week, since literally the last time I posted one of these videos, that was the lowest price has been over the last week, and it just so happens to line up with that anchored VWAP. So considering the NASDAQ index has been relatively weaker than the other indices, you want to look at support tests on that name, okay? Because think about it. If it's the weakest instrument and it still has the ability to defend support areas, then what's likely going to happen is the other stronger instruments will then be able to continue to push higher, okay? On the flip side, if you have the weakest instrument breaking below and breaking down below supports, then further weakness in the stronger names are more likely to occur. So near term, definitely keep an eye on that 17,409 level, okay? 2 pieces of confirmations backing up that area of support. If that happens to break below, the next area to the downside on my end is this little demand structure right here, okay? So that lies around 17,230. So, you have about 170 point, downside risk to the next area of a potential support. Okay, so that's what we want to look at on the NASDAQ. Going forward, the opposite of the relatively weak name is the relatively strong name. So on the Dow Jones, if this thing keeps pushing, you want to have an area to look at for resistance. And I get asked this all the time. People are like, hey, well, considering it's at all-time highs, how do you come up with resistance on a name that is trading in uncharted territory? And that is a good question. There's a few methods to do this. I'm going to go over one method, which is the use of a trend line. You could also use a measured move. Measured moves, an example of a measured move is look at the last time that it broke above a previous all-time high and see how far the instrument was able to rally from that point. History tends to repeat itself, so you could always kind of use that as a gauge of how far this move will move higher. You could also use fib retracements. I know a lot of people use those for charting key areas in uncharted territory, but for this example, we're going to use a trend line. So, trend line, they go all different ways, up, down, sideways, but in this case, we're going to be looking at this right here. Okay, so this trend line has been a key pivotal area, okay? You can clearly see, based on this yellow shaded area, prices bounced there once, twice, 3 times, 4 times, kind of 5, and then 6. So this is the most recent test since July of 2023. Okay, so essentially, like I said, considering this is the stronger index, you're going to want to see how it reacts to a potential resistance area. This resistance at this time is sitting at 38,735. Now, the issue with trend lines is the fact that they're ascending lines, meaning as time progresses, the line will also increase. So if we test it soon, that line's going to be at 38,735. But if we test it in like 2 weeks, that line's going to be all the way up at 38,950. So it's important for you to plot it on your end so that you're not like freaking zooming into this video and figuring out where it's going to be, right? So make sure your chart is on BADJ and then draw it just at how I have it drawn. So if you're looking to use it. So if the Dow Jones, which is the strongest index at this very moment, rejects at that resistance line and starts to top out and come off, then it's likely that the other indices will also have some weakness because they will lose their main contributor to the rally, in plain English. Okay, so if that does occur, the market breadth will then also, lose some steam. Okay, so that's that. And then quickly, I wanted to go over the coin base shares and the China shares that I covered in the last week's video. So last week's video, I covered how I started to accumulate shares of Coinbase, FXI, and KWeb. Okay, it's important to note that Coin I already scaled out of 30%. So this trade becomes risk-free. I'm hoping for higher prices, and I am still confident that that will occur. But we got the bounce right where I had anticipated it to. I was kind of hoping that it would continue dropping within these two areas. As I said, I would continue to add between those two areas as highlighted. It never really got down there, so I just added on 3 different days. I bought and then I added on 2 different days. My average cost is $123.49. And I said to the Discord, I said, this was yesterday, Coin had a nice day. I said, for those of you asking, my first take profit is $136.50. Okay, and I said that at 10:12 a.m. before it had occurred. So you could see, right, if I plot that level, 136.5, right, it ended up hitting it right around 45 minutes after I posted that. So I scaled out of 30% of the position, and now I am currently holding 70% of the position. Right now, my stop loss moves up to my average entry, which is $123.49. And then I will continue to scale out of the position as it goes in my favor, if that's, what's going to happen. Okay, so I just wanted to share that. What did we get on that? Assuming you guys had the same, a lot of you guys actually had better average prices than me because it went down as low as 118. But from my average cost, let's see, it went as high as 10%. So in a week, 10% gain, I'll take that all day. Going to FXI and KWeb, I'm just going to cover one because they look the same. If you look, this is FXI on a daily chart, right? And then if we look at KWeb, you'll see a very similar chart. KWeb's actually a little bit more weak, but FXI and KWeb is what I bought. Basically, it is the S&P 500 and like the NASDAQ of USA, but for China, right? FXI is similar to the S&P, and then KWeb is similar to the NASDAQ. So I covered how it bounced right at the low from October of 2022, and I bought on this date here, right, last week. I have not added to it. I'm going to use this general area to add. I still believe in this chart. Will it work 100%? I wish, but that's obviously not the case. I have clear invalidation point right under that previous low with some cushion. And I wanted to share an email that I received. This is from an unknown source. You could see China flows starting to turn positive. JP Morgan posted that. We also see flows into mainland China were very elevated by historical standards, reaching about $12 billion today. Notably, the inflows were almost entirely driven by domestic investors, suggesting national team support. So that's good to know. We also have largest buying in 5 years, right? In cumulative notional terms, the net buying in Chinese equities from January 23rd to January 25th is larger than any trailing 3-day period in more than 5 years. So, that's good to hear because I purchased it on January 23rd. So from that day to the next 2 days, you had the most buying in the last 5 years. So is it because of Dylan O'Neill got in? Who knows? I would like to believe so. You also have generational low and long only allocation to China by Goldman Sachs, right? So there's a few different pieces of information that I received in this email, which is, very nice to see. Now, is it going to work 100%? Like I said, no. But I'm still going to follow my original predetermined plan, and we'll see how it works out. So that's about it for tonight's video. I will see you guys next week. And as always, feedback is very appreciated. Peace.